Hey traders, Raghee here, and in this video we're going to talk about something to keep a heads up for when you're trading intraday, starting with the directional bias, which for the most part, once I get double green confirmation of the 8, 13, 21, and 34 EMAs, it doesn't matter as much what the anchored rolling 10-day VWAP nor the first of the month anchored VWAP is saying. Clearly, I'd like to see the price action above both of them, but they will act as dynamic support and resistance regardless. But when it's double green, I'm not as concerned about whether or not price is above or below. I'm going to have clear directional bullish bias. So we carry that into the morning. Now, the thing that I want to make everyone aware of is when the opening range reading, the reading of the first 30 minutes after the bell rings, is wider than average. So we have a 210 point reading on the morning. Well, what does that mean within the context of what we would typically see on the Dow? So if I take a look at the Dow during this hour of the day, which is the 9 to 10 hour right here, so that takes care of 9 a.m. to 10 a.m. Of course, inside of that is the open. When the range for that is on the upper end, as you can see, this one was right at the upper end of the range. It's not unusual for the market to stay stuck in a range. I'm not saying every time, but what happens is when this reading is 210, that means between 9:30 and 10 o'clock, we put a 210 point range in. When that happens, oftentimes you're going to see the market stuck in that range. So here's that range right in there, and it's going to stay stuck in there because the market's actually put in such a wide range that you're going to need even more sentiment, opinion, volume, etc., usually to break that and to continue to move higher or lower by breaching that opening or clearing range. And usually that just doesn't happen. Again, it's probability. It's never a never or an always. It's just a probability. And that's exactly what you can see here. Let me give you another example. So let's use the Russell, for example. Now let's go from large cap to small. And we'll take a look at the RTY here. And again, this is just about increasing probability of reducing your expectation and your reliance on a breakout. So here's 18 points, right? Almost 18, 17, 9, 18, right? So the Russell put in 17.1. So again, it's not quite at, but it's right, it's not quite beyond. It's just right there or just below the upper end of the range at 17.1. And you'll see again, here's our range, and we've just been pretty much stuck in there after putting, so when you're really close to that upper end of the range, be aware that the likelihood of the market being contained is higher. Well, let me show you an example where it's not, and this is where we took some bullishness this morning. We played an individual stock in Microsoft, but the NAS. So NAS only put in 82.25. Well, where does that land on our scale, and would I expect the NAS to stay stuck? Well, it's nowhere near. In fact, if anything, it's at the lower end of our scale. So I'm not going to expect the NAS to stay stuck unless it's printing, say, close to 115 or greater. So then we go back to the NASDAQ chart and take a look. The NAS was easily and continues to break that opening range. So think about that. Think about what kind of behavior are we seeing in terms of price movement, in terms of that range between 9:30 and 10, and let that be a guide for whether or not you're going to fade, whether or not you're going to anticipate higher highs or lower lows. And today we were fade buying and focusing on the Dow and the Russell and even the S&P remaining stuck in a range, while the NAS was really free to go see what the upper or lower limits of the price movement range were. Again, all that can be determined by 10 a.m. in the morning. Hope that helps, and I'll see you in the next update.